Welcome to the 5-Minute Prime Podcast. Quick, actionable tips to master personal finance and real estate investing. In just 5 minutes a day, we'll help you build wealth and achieve financial freedom. Hey everyone, and welcome back to the 5-Minute Prime Podcast. I'm your host, Martin Maxwell, and today we're diving into the ever-changing world of tax breaks, specifically bonus depreciation for real estate investors in 2025. Now, if you're not familiar with bonus depreciation, don't worry, we'll break it down. But for those of you who do know it, you know it's a powerful tool. It used to be even more powerful, allowing you to deduct a huge chunk of your property improvement costs in a single year. We're talking potentially massive tax savings. But as with many good things in the tax code, it's been on a bit of a roller coaster. We touched on tax advantages briefly in episode 3, where we talked about the overall benefits of real estate. And as always, preparation is key, as we discussed in the P for Prepare episode in real estate investing. But today, we're focusing specifically on this powerful and somewhat uncertain tax break. Is 100% bonus depreciation coming back? What's the current rate? And how should you, as a savvy real estate investor, be planning right now? Let's get into it. Okay, first things first, what is bonus depreciation? Simply put, it's a tax incentive that allows businesses, and that includes real estate investors, to deduct a large percentage of the cost of qualifying assets in the year they're placed in service instead of depreciating them over many years. Now, what kind of assets are we talking about? For real estate, this typically applies to improvements to your property. Things like a new roof, HVAC system, appliances, landscaping, even interior renovations. Basically anything with a recovery period of 20 years or less. It does not apply to the building structure itself. That's depreciated over 27.5 years for residential property, or 39 years for commercial. Now, why is this such a big deal? Because it significantly reduces your taxable income in the year you make the improvements, which means you pay less in taxes and have more cash flow. And as we've discussed many times on this podcast, cash flow is king. So that's the what. Now let's talk about the history. Back in 2017, Trump's Tax Cuts and Jobs Act gave us a gift, the 100% bonus depreciation. That meant you could deduct the entire cost of qualifying improvements in the year you made them. It was a huge incentive for investment. But, and there's always a but, that 100% rate wasn't meant to last forever. The Jobs Act set up a phase-out schedule. 2023, it dropped to 80%. 2024, it went down to 60%. 2025, and here we are. It's currently at 40%. 2026, it's scheduled to drop to just 20%. 2027, and then poof, it's gone. So, as of the time of recording this episode in March 2025, if you spend $100,000 on qualifying property improvements, you can deduct $40,000 in the first year. Still a significant deduction, but obviously not as impactful as that 100% write-off. Now, there's been a lot of talk about reinstating 100% bonus depreciation. There have been bills proposed. There's been political wrangling. But as of right now, it hasn't happened. A bill to extend it actually passed the House in 2024, but stalled in the Senate. So we're in a bit of a holding pattern. But what does this mean for your investment strategy right now? Here's the reality. You can't make investment decisions based on potential tax changes. You have to work with the rules as they are, while staying flexible and informed. So here's what you should be doing. 1, don't delay essential improvements. If your property needs a new roof or HVAC system, don't put it off hoping for 100% bonus depreciation to come back. That 40% deduction is still valuable, and delaying necessary repairs can lead to bigger, more expensive problems down the road. 2, strategic timing, if possible. If you have discretionary improvements, things you could do now but could also potentially wait on, it might be worth considering the timing. There's a chance, however slim, that 100% bonus depreciation could be reinstated retroactively. But again, don't base your entire strategy on this. Remember, it's the time in the market matters, not timing the market. 3, consult your tax advisor. This is crucial. Tax laws are complex and everyone's situation is different. A qualified CPA or tax advisor can help you navigate the current rules, understand the potential implications of any changes, and develop a tax-efficient investment strategy. 4, focus on qualifying assets. Make sure you understand exactly what qualifies for bonus depreciation. It's not just any expense. Generally, it needs to be tangible, personal property with a recovery period of 20 years or less. Lastly, stay informed. Legislation is always changing. Bonus depreciation isn't the only tax issue that could impact real estate investors. There are other proposals being discussed that are worth keeping an eye on. Additionally, on other potential tax changes, there have also been discussions about potential changes to taxes on tips, overtime pay, and even Social Security income. While these aren't directly related to real estate, they could impact the overall tax burden for individuals, including investors. The tax landscape is constantly shifting, and bonus depreciation is a prime example of that. We've gone from 100% to 40% with the possibility of going back up, but no guarantees. So, what's the bottom line? Don't let tax uncertainty paralyze you. The 40% bonus depreciation rate for 2025 is still a significant benefit. It can still dramatically improve your cash flow and reduce your tax liability. Your challenge for today. I want you to do two things. First, if you're planning any property improvements this year, talk to your tax advisor. Make sure you understand how bonus depreciation applies to your specific situation. Second, start tracking the news on potential tax legislation. Stay informed so you can adapt your strategies as needed. And as always, if you found this episode helpful, please subscribe to the 5-Minute Prime podcast, share it with a fellow investor, and leave us a review. You can find more resources and tools at reiprime.com. I'm Martin Maxwell, and remember, the tax code can be complex, but it also offers opportunities. Stay informed, be proactive, and work with qualified professionals to maximize your benefits. Until next time, keep learning, keep growing, and keep building your future.